G'day folks, welcome back to another update, and today we're looking at Bitcoin, and it's actually continued its downtrend from our last video. Before we go to the charts, let's make sure you hit that like and subscribe button to support the channel. In terms of Bitcoin's outlook, as of today, December 29, Bitcoin has experienced significant growth, surpassing $100,000 earlier this month, driven by factors such as the approval of Bitcoin's ETFs and increased institutional adoption. However, the cryptocurrency remains volatile, with prices fluctuating between $92,000 and $100,000 in recent weeks. Analysts advise caution, recommending that investors limit Bitcoin exposure to a small portion of their portfolios due to its inherent risks. So as always, look at the long-term trends, and if you're new to the channel, we look at the monthly, the weekly and the daily, and we look at the price and the CCI breaking above its their moving averages respectively, and it has been that way now, bullish for since November 2024, but it had a bit of a dip here between July and November, but it's been recovered since then. So bullish on the monthly, bullish on the daily. However, you notice the price, even though the price is bullish, so this is the weekly, I should say, this is the weekly, this is the daily. So on the weekly, let me just expand this. It's actually broken above, and it's actually broken into this moving average range, giving us a neutral signal. You'll notice also the price leveling off and going sideways, not quite broken below its moving averages yet. Other thing to notice as well is we've got slightly lower highs on the CCI versus higher highs in the price, and that's a bearish divergence. Now, within our rules, we expect this to retrace at the minimum to about 23-38% Fibonacci. So what we do is we look at the Fibonacci back to that significant low. You can see there it's already touched that 23%. That's a minimum retrace. It could fall a lot further, of course. So if we drew that, let me just, that's it. So it's already touched that with that wick in that candle to previous week, but currently it's in a neutral positioning on the CCI, and we expect this to fall further, and that looks like it's going to continue. This is the weekly. On the daily, we had another bearish divergence here. This is independent from the weekly in terms of divergence and different time frames. So we had the bearish divergence here, lower highs versus higher highs in the price, hit that resistance at 108.263, and it's actually falling further since then, and it's actually hit a few times. It's hit our 23% minimum retrace level, but notice the CCI is still falling, so you might see it fall further. This is the daily chart. We can't tell how far it's going to drop, so I don't trade these. What I look at with these divergences, if I'm trading on the daily, if I see it rising like it is here, the CCI is moving in line with the price. I track it. As soon as I start seeing a divergence like that, would have been your first indication when that high was lower versus that higher high back there. That gives you an early warning saying, look, the price is probably going to pull back. Now, in this case, it took a few days, actually a couple of weeks, for it to continue rising, and now it's starting to pull back now. So that was an early warning of a pullback, which it's actually done that. If we look at the intraday chart, so we've got the daily here as a reference. We only take short trades in alignment with the daily CCI. So since our last update, you would have gone short. Now, what I've done is I put an indicator in here which shows in red where the price and the CCI are both breaking to the downside. So that would have been an early warning to get into that point there and close it out once that CCI breaks into that moving average range there. So get it out there. Another entry there, and close it out when it break down there. Another entry there, and close it out near the bottom there. Another entry, and close it out on that candle there. Avoid going long because we're only going short during this period. There would have been a false break there, possibly a little break even. Another short entry there, and you would have closed it out, or maybe a break even a couple of times there, but just track the price down. Another entry there, probably a break even or a small gain. A false break there, avoid going long. Another short entry there, and close it out when the CCI breaks into that moving average range near the bottom. Another false break there, entry there, and close it out when the CCI breaks into that moving average range near the bottom there. Now at the moment, both the CCI and the price are above the moving averages, but we only take short trades, remember, because of the daily downtrend. So wait for both the price and the CCI to break down below that moving average range to go short. To support the channel more, hit that like and subscribe button and share the video. For added benefits and the cost of a coffee, consider subscribing to the Patreon page, where we look at weekly scans of bullish trending shares and insider trades that may have occurred. Thanks again, and see you in the next video.